I'm Judy Shaw for NYSE Floor Talk. Joining me today is Nelson Chu. He is founder and CEO at Percent. Nelson, it's wonderful to have you here. Thanks for joining me.
Thanks for having me.
My pleasure. Now, I'm looking forward to chatting, but before we do that, quick note to our viewers, this interview is for informational purposes only. The NYSE doesn't recommend any investments or investment strategies. All right, so Nelson, tell me about Percent. What do you do?
Yeah, Percent has built the modern credit marketplace, specifically for private credit as an asset class, which is kind of been under the radar for a little bit, underappreciated, but now everyone's starting to realize just how much potential it has in this market that we're in today, especially. So similar to public debt markets, you have borrowers who need debt capital, you have underwriters like investment banks who structure these products, and you have investors who want to invest in it. But unlike public debt markets, there is no tech to speak of in the space whatsoever. And so we are the first company to bring real technology into the space, getting everyone off of Excel, phone calls and emails, et cetera, and we're actually bringing more transparency, more standardization, more efficiency than ever before. And so we've done about $1 billion in volume so far, and we're just getting started.
Okay. All right, so Nelson, private credit was traditionally lesser known when compared to the public markets. So how would you define private credit to those who aren't as familiar?
For sure. The best way to look at it is really think of it as almost like direct non-bank lending, right? So let's rewind back to the global financial crisis. Before then, banks did a lot of lending, right? To small businesses, to consumers. And then the regulators came in because of the crisis and they said, you can't really do that anymore. We're gonna make it very expensive for you to do that. So all these non-bank lenders stepped in to fill that gap, to finance these small businesses, these consumers, and ultimately get it to where it is today. So it rose and came to prominence post-global financial crisis. And you can think of pre-public companies like Affirm and SoFi as like firmly in the private credit space before they turned public, and companies like that. And so it is a huge part of the economy today, and it powers so much of the global economy. It's just underappreciated, but most people have probably interacted with it in some way, shape, or form before.
Now, recently we've seen banks like Silicon Valley Bank, Signature Bank, and First Republic fall. And because of that, many banks are tightening their loan standards. So how have these events and the recent recession made it private credit's moment?
I think it's time to shine for private credit. We've been waiting a long time for this. So it feels like the GFC in some ways all over again, right? Because regulators are going to come back in and step in and kind of lay down the ground rules for what banks can and cannot do when it comes to certain types of lending. And so it is, again, in times of crisis and in times of regulation, private credit comes to solve a lot of these problems. And you're seeing that right now. The smart money, whether it's KKR, Blackstone, Apollo, all these guys are doubling down on private credit in this market in particular because they're seeing the opportunity there and the opportunity to earn excess spreads and alpha in an economy and an environment that's actually pretty volatile in the grand scheme of things.
All right, now, Nelson, I understand that congratulations are in order. You had a recent fundraise. Tell me about that.
Yeah, we did. We closed a $30 million Series B. It was oversubscribed and it was an up round. So in this environment, we'll definitely take it. But it was definitely off the tailwinds that we just talked about, right? Like there is so much interest, so much demand in private credit today. You're seeing it every single day in the news. And I think we parlayed that into a lot of interest from venture capitalists who recognize that, there is a huge opportunity here that is going to be here for years to come. And we're well positioned to take advantage of that.
All right, well, congratulations again. And thanks for joining me on Floor Talk.
Thanks for having me. It's great to be here.